All right, well, thank you very much. Welcome, good evening to everyone. My name is Min Mikhail. I'm the current chapter president of the International Model Investment Club. Welcome to our March meeting. Before we begin, we'll go through a quick introduction and into a little bit who we are and some of the meeting logistics, followed by a review of tonight's agenda. This is a quick presentation. We were founded in May of 2016. I am the International Model Investment Club is a better investing model club that is open to the public. Our meetings are held on the third Mondays of each month, with the exception of December when we meet the second Monday of that month. Our club uses hypothetical money that allows us to avoid currency exchange issues, taxation concerns, and allows us to have membership that's international and to use this as an opportunity to learn. To that point, our primary purpose is to serve as a learning lab. We apply better investing principles and the fundamentals of stock investment. We also learn how to use online tools such as the online stock selection guide to learn on investment and how to manage a club in terms of its operations. All our meetings are held online, so in combination with the use of hypothetical money, this allows us to serve visitors and guests from across the world. Currently, we have 12 members from across the United States, Canada, as well as China. You'll notice on the right-hand side of your screen a control panel. The handout, the agenda for tonight's meeting, as well as some FAQs, are available under the handouts portion of that control panel. All guests, welcome. Thank you for joining us. You will be muted for the duration of the meeting. There is a question box in that same control panel. Please feel free to use that box. We will do our best to address questions in real time. At the end of the meeting, there will be a portion of time when we unmute you and invite you to submit your feedback, questions, comments, and any questions that may not have been addressed or not comprehensively enough during the presentation. We are looking to time our sections in the hopes of being respectful of everyone's time and finishing kind of all the information that we want to cover today. So you might hear some members receiving friendly prompts. Other than that, we all move on to the disclaimer for tonight's meeting. All the information presented today is for educational purposes only, and it is not intended as a recommendation to buy or sell any of the securities that are mentioned. The views expressed tonight are those of the participants only and do not necessarily represent those of Better Investing. Investors should conduct their own research and analysis before making any investing decisions. The securities discussed today may be held by the presenters in their own personal portfolios. This presentation may contain images of websites, products, services, graphs, resources that are not endorsed by Better Investing or by the presenters themselves. And finally, this meeting is recorded and will be posted to our YouTube channel in the coming days. On our channel, you can also find recordings of past meetings for your reference. So, having said that, we'll go through tonight's agenda briefly. We'll first hear from our treasurer, Reddy, about the state of our portfolio. We then have Anitra kindly has volunteered to give us an education topic tonight. There's an article summary that we'll hear from. We also have several quarterly and annual reports that are due this evening, and we'll go through a few of those. Then we'll open the microphone for guests and for visitors. And then we have quite a bit of club business, including a review of our annual goals for 2023, as well as future looking for the rest of the year. We are going to also look to nominate new executives for the 2024-2025 year. So volunteers, don't all come forward at once, but we're excited to hear from you. And then we'll discuss other topics, including education sign up as well as stock studies. So thank you for the time, and now I will pass it off to my friend Reddy for him to give us a presentation on his treasury report. So thank you very much, Reddy.
And I will make Reddy presenter. Hold on.
I think I made him presenter at this point.
Okay. Oh, did somebody already make Reddy a presenter?
I did. Yes, I did.
Oh, thank you. Thank you.
Yeah, of course. So yeah,
Ready,
we're
you have
ready
to
for your presentations.
accept the.
Yeah,
Are you muted? Is Ready muted? Ready, you're muted. Ready, you're muted. Self-muted. I think you're self-muted. Ready, are you there? Oh.
Joanne, maybe you can unmute him. I don't know.
Well, he's unmuted from our end. He's self-muted on his end,
Oh, okay.
I believe.
So Riley, we can see your screen. I don't know if you can hear us, but we can't hear you. Any luck?
Okay.
There he is.
Okay.
Oh, there
Okay.
you go. Perfect.
Okay. Okay. That's not my choice. Unmuted. Okay. You can hear me now?
Yes, now we need to see your screen. So accept the
We see his screen,
screen.
Joanne. I'm not sure what's going on with
I can see a screen as well.
Oh, do we see his? Do you see his screen? Okay, sorry.
Okay. Okay. If I can pass John's test, that's correct. Okay. Here is the latest report. I did update based on today's input from the members. Okay. First slide is I deposited 1200 yesterday so that we have a current balance available in case we decide to purchase something. Next is this is a current picture. I purposefully updating this on Friday before the meeting so that we have the latest position on total security value and cash available. Okay. Next is this is the latest the gain and loss portfolio. Based on this one, I think we are doing good for last couple of months. Shown by this slide. We have I listed here only 10% and greater gain and 10% or greater loss, and we have only one loser, and most of them are gainers. Meta is doing excellent. All others are doing good. Next is this is kind of I noticed after the last month I noticed a kind of a strange phenomena here. If I change the date here, you see my cursor? Hello?
Yes,
Yes,
we see.
Yeah. If I change this date, okay, this is picture is completely changing. Okay, so I changed like Friday's date. Then 1 year picture is completely different. And if you see the next picture, okay, it looks normal because it's December 31st, 2023. Okay, so we have to think what year we are looking, whether this is designed for the current date or yearly ending date. Okay, I need to study a little bit more. Okay, the academic year ending we are looking good, but on the other hand, current date we are not looking that good for 1 year basis, for example. Okay. This is something that I have to think about and do a little bit more homework and find out why it is so distorting picture. Okay, this is the latest update. I updated today, and many of these dates are more recent and current, but a few of them are really old. Okay, Amazon, for example, ResMed need to be updated, including mine. I have a problem with the subscription. Okay, I will straighten out. Okay. Next.
Ready? Can I make a suggestion for the
Yeah.
people that are having problems updating their SSGs? If they can send me their ITK file, that would be Piero, Mina, Christopher, Jane.
Yeah, I just did it.
That's what the previous guy, what's his name? He used to work with me. He used to receive all those files.
Yeah, if you can send, yeah, I can update this. So send me, well, actually, Jane, you did it in February, but if you know how to do it, yeah, do it before when Reddy sends out his reminder. He's trying to remind everybody before he does his treasurer's report. But if you can't get it updated, just send me the ITK file and I can update it for you. So Piero, are you on? And Mina, can you send me yours?
Yeah, I think I just updated it after the reminder, so.
Oh, so it might
It
be
should already
updated
be
already. Okay, and then Christopher, I don't know if it's
One thing we should be aware of is it says last generated. So I did my report on the 9th, but actually if you go back and look for today, like when you update in your SSG on the BI website, it'll give the latest price update. And
yeah.
if you click on the column that says last generated, it usually updates it, but this is a PowerPoint, so that's,
Yeah,
that
it's just an
apply.
image. Yeah.
Haney, I did it this update today. It's interesting how this works. My next slide shows. Okay, this is based on your dates.
Right.
Okay. The prices. I think the prices here. Let me go back a couple of slides. The prices here are, I think, the latest dates.
Yeah, I'm not sure if those two reports are how they're linked. So I don't. This one is showing what's the price on here.
Yeah.
The price for Freeport is right. It's $44.61. That's the latest price.
Yeah, I think the most important thing is to evaluate the PERT chart. Okay, we need the latest updates of SSGs. These play more important role in PERT charts.
Yeah.
Okay.
Okay. Next slide is our company's diversification. Fairly looks good. We reduced some this. We have a good amount of cash. If anybody wants to propose to buy something, okay. Last month we did not buy anything. Sector diversification, again, because of the one stock, we have a high health portfolio and communication service. This fairly looks good, except we have some 2 or 3 sectors missing. Okay, but that's okay with this our club amount of money. There are a total of what, 11 sectors. Next is the industry level. We have a little bit more on internet and biotech, but this is fairly good distribution. Next slide is diversification chart. We have Mid-size, large, and mega fairly good. Small is a little bit more than what we need. This is the recommended BI proportion. Large 25, small 25, and mid-term 50. Okay.
Eddie, you have a minute. You have 1 minute ready.
Okay, I'm almost done, Joanne.
Okay. Mhm.
This is company size diversification, which looks good. I think this is my last slide. Okay, this is the one I started including last couple of meetings. This is our portfolio picture. This strange phenomena is due to payoff of the past leaving members. So don't get disturbed by this.
Okay, thank you, Eddie.
Okay, thank you.
Okay. Let's see. I think we can start with the reports. Oh no, Anitra, you have 10 minutes. Okay, should we give it, Anitra, do you need the screen? Anitra, you're self-muted.
Thank you. I'm sorry. I just minimized that screen. Yes, I do need the screen.
Okay, I'm making you presenter.
Okay. And okay. And I'm going to have to say that my screen is going to look similar to what you've just seen for those in the audience. Do you see it?
Yes, Better
Yes.
Investing?
All right. So this education segment is from the April 2024's edition of the Better Investing magazine. Oops.
Sorry, Anitra, would you mind? Oh, never mind. Sorry, I did it. It's okay.
Okay. All right, and it's called Grab Some Graphics. Now, many of the graphics we just saw.
John, I don't see any screen here.
Does everybody see the screen?
I see it. It's there, ready. You have to open up a window or something. I don't know, but it's there.
Yeah, I see it.
Ready, you have a dual monitors. Maybe that's why. Figure out.
Okay. It's Grab Some Graphics, and it's 10 myiclub.com charts that help members evaluate their portfolio. Now, this club, we use this very well. And for those that may be listening that don't, it's a great tool that's a part of My iClub. Using these reports can help clubs make informed portfolio management decisions. This article covers graphs available in the report section of myiclub.com. There are more than 40 reports available to all club members on the platform. And getting to know the reports can help their portfolio management of club accounting and club operations. Several of the graphs are also available as table reports in the portfolio. You will see 9 of the 10 graphs excluding member ownership. Company size. A company pie chart shows the club portfolio grouped by the size of the company and by the company. The graph uses the BI method of annual sales, determining the size of the company by splitting the large category into large and mega and the small category into micro and small groups. And the link at the bottom of the graph in My iClub displays a recommendation for company size diversification. The sector industry graphs are a series of 4 pie charts showing the sector and industry diversification of the club's portfolio. The 4 graphs show how the portfolio fits into the 3 super sectors, industries, and finally shows individual companies. All 4 graphs have the super sectors indicated by color-coded sections. The cash section in blue may be included or excluded. Here are the third and fourth charts of the sector in an industry labeled industries and companies. Charts would show along with the ones on the previous screen. This is the portfolio heat map, and it's seen on the IMIC Club home screen. The size of each block is proportional to the stock's percentage of the total portfolio. How well each stock has performed is color-coded. The one to the right excludes the cash by clicking on the link where you see the red arrow, and the one to the left includes cash. It looks a little different. Club assets. In this slide, a graph shows each asset of the club with its percentage of the total value of the club. It can be displayed as a pie chart or a bar graph. The graph can be generated for any saved valuation date. Club unit value. This shows the unit value over time. This time period can be customized by adjusting the dates. Portfolio performance, which when clicked shows the chart of club gain and club loss graph. The total value and the cost basis of the club's portfolio over time are plotted in this graph. A checkbox allows for percentage change to be plotted rather than dollar value. This time period can be customized. Security performance. This graph plots the market value and cost basis of the individual stock selected. I chose Amazon from May 2016 to current. This time period can be adjusted also. EPS growth rate. A pie chart places all the stocks in the portfolio into 3 color-coded growth rate ranges. Growth estimates from linked stock selection guides of stock watchers are used when there is a linked SSG. Morningstar analyst estimates are used for companies without a linked SSG. There is a way to check if the portfolio is truly a growth portfolio. And last, global diversification chart. The diversification of the club portfolio by country of incorporation is displayed in this pie chart. The accuracy of this chart is dependent on the accurate designation of the country for each security in its security profile. This can be used as a check that all securities have their correct country of incorporation selected. This is more important now with the more extensive foreign income reporting requirements that may be required with federal income tax returns. That is the end of my presentation. I thank you for allowing me to do it, because everything you see is things I've just learned how to do since I've been a part of this club. And I appreciate the opportunity to learn and to experience it. Thanks to everyone. Any questions?
Yeah. Hi, Anitra. Can you go back to that earnings per share slide? I think it's like 2 slides back.
Okay.
Yeah, it's right there. I don't understand. So this is like earnings per share growth, but what are the percentages on each of the stocks? Is that how much of the portfolio it is?
That's a good question.
Kind of like that.
I think that comes from the SSGs that people do, and so if you're projecting a certain EPS growth rate, that's probably where it comes from.
Well, if you look in the middle,
My Schwab is 7.5% growth rate, and it's showing 8.2%. I'm wondering if that's the percentage of the portfolio that it,
Probably. Yeah.
rather
that's what I-
than the actual EPS. I
Oh,
think,
maybe.
yeah. Okay. Just wanted to clarify. I wasn't sure what those outside numbers meant compared to that, but I think, yeah, the
Oh,
range.
maybe you're right. Yeah. So
I
7
think
to 12% growth rate, and then Schwab is 8.2 of the portfolio. That
Yeah,
I
makes
think
sense.
the
okay.
focus is the inside, the fact that is it within the 7%, which is a large company, the 7 to 12, which is medium, and the 12%, which is small. I think it's trying I'm not quite sure how certain outside numbers are, but I think it's letting us know how much where our companies are landing and how much we have in the small, small, medium, and large companies as far as that growth rate.
So what I find is really interesting is that our small companies have the lowest EPS growth, and our larger companies have the greatest EPS growth. Doesn't that seem odd to you guys?
Well,
Like-
like Meta, for example, and Amazon and
Amazon.
other tech have been growing very rapidly
Yeah,
relative to the rest of the market. So
okay,
I think
yeah,
just that's a recent phenomenon.
yeah. Kind of goes against the standard expectation.
Yeah.
Yeah. Okay, thanks, Anitra. Let me see, I think
You're
you're on totally on time. I think we can start on our, I'm trying to be good about our timing. Oh, there we go.
Oh, actually,
Okay.
if this was done in Google Slides, and when the way it's set up, you actually have a timer in front of you that helps you to manage your time.
Oh,
And I
good.
appreciated that. Yeah.
Okay,
Okay.
all right. So I think next we have the annual reports. Should we go?
We wanted to know about ResMed, I guess, last month, right? So,
Oh, is Isla here?
no.
Isla's not here.
So,
Okay,
okay.
Isla's not here. Okay, all right.
And then,
Okay.
and Piero was supposed to go last month so it's getting, his report's getting to be pretty old. So we probably should do Piero first.
Okay.
He knows how he wants to
Piero,
sound. I want to buy.
Piero, are you ready to present?
Sure.
Okay, do you want me to give you the screen?
Screen, okay, sure.
Okay.
Okay, show my screen, yep.
Thanks, Anitra. That was very helpful.
Yeah, thank you,
Yeah.
Nitra.
Thank you, Anitra.
You're welcome. And I really appreciated that you had questions. So thank you.
We can see your screen, Piero.
Okay. So I guess we'll start with the annual report for summary there. Okay.
Mm-hmm.
Yeah, so Amazon, right? It's currently selling at about $174, something like that. At the time, I did this supposed to have been presented last month, is about $168. It was selling. The purchase price, we purchased it at $161. Its all-time high, well, 52-week high was 175, but it's all, 52-week low was 88. That's when we should have bought it. Its all-time high was about $185, and we purchased it at 161. So we were purchased high. We shouldn't have done that. Okay. Current
Piero,
PE.
I just want to remind you, you have 5 minutes for your report.
5 minutes. Okay.
Yeah.
So very quickly, current PE ratio is about 58, which is a little bit high. It's going a little bit lower. Needless to say, Amazon did fantastic. It's the third quarter of 2023. It just knocked everything out of the court or out of the field. It's done fantastic. This was, as Andy Jassy would say, the fourth quarter was a record-breaking holiday shopping season and close out a robust 2023 for Amazon. Okay, Andy Jassy, right? So he did that. He did fantastic results. They started what we had always suspected, that Amazon is using all the information that they collected about you and they issued a personal digital assistant named Rufus. Now I'm trying to find this name here. Rufus, here it is. Now it's a Rufus, a new generative AI-powered conversational shopping experience. Rufus is an expert shopping assistant. So it's a digital virtual assistant that will accompany you on your shopping spree on Amazon. They know all your preferences, they know all your likes, they know everything about you, and they will tailor everything to you via that assistant. So what I'm saying now for, we should hold for Amazon. If we're thinking of selling Amazon, sell it much higher than $174 now, because we'd only realize a profit of about 12 bucks, which is not much of a profit. Okay, and so we should sell it maybe when it goes up to over $200. This is net sales. This is quick web slides that they presented on their 2023 result, fourth quarter 2023 results. Net sales, they were all up about 62%. North America, international, they were up about 24%, and AWS was up about 14%. Trailing 12 months, meaning year by year. So it went from 513 sales to 574 billion. So the sales increased, not a phenomenal amount, but all the profits were phenomenal. Operating income, month by month, fourth quarter 2022 was 2,737,000,000. Fourth quarter 23 was 13 billion, so quite a what is it, 383% increase year over year. Operating income, trailing 12 months, operating income went from 12 billion to 36 billion. Okay, this is all the entire company. Net income went from 278 million to about 10 billion. 1 year, so that was up an enormous amount. Net income and loss for the entire company, it was a loss of about $2 billion fourth quarter 22, and it was $30 billion gain in fourth quarter 23.
You have a minute.
Okay. Segment results, North America. North America was the star performer. Europe, international, mainly Europe, was less so. International, what's it called? They were barely, they were a loss. Fourth quarter 22, they had a gain. I think this is what, free cash flow. Oh, this for the entire company. Anyway, free cash flow again for the entire company. And then they have some reconciliation figures here. Reconciliation meaning that the previous figures that they had issued were a little bit hypothetical, but here now they've justified them, brought them up to more modern. The next thing I should show you maybe is my studies. Amazon, which I just updated right here, date modified. The 18th of March, which is today. So it should have shown up. Anyway, I said sales growth at 10%, earnings per share growth at 17.5%. I'm projecting from the annual, all right? And the annual in the last quarter will essentially be the same. The projections from Morningstar are a little bit more optimistic than mine. So I put them down a little bit conservative. The only thing that's kind of worrisome here is debt to capital. Debt to capital is about 46%, which is a little high, but it shouldn't be a problem for Amazon because on their balance sheet, you see the interest income is about $2 billion. Interest expense is about $2,900,000,000. And the two kind of cancel each other out, so don't worry about the debt. Their current ratio is almost 1.34. Quick ratio is about 0.9, which is good. they can meet their debts. Valuation and return. I said, high PE of 50, low PE of 40. I wanted this number here to, at the low price to be about 20% below the current price, which is what right now is 174, but it used to be 168. So 20% below would have been about $120, $24, $116 is good. So 325 is my high price, low price is 116. Upside downside ratio used to be 3 to 1, which was good. Now it's 2.6 to 1. So I mean, this going the potential to get to that high price is being actualized, and it's 2.6 to 1. So we're still in the hold zone.
Okay, we need to move on.
Yeah, okay.
I mean,
so my recommendation is hold.
Okay, fantastic.
Okay,
Okay,
thank you.
Thank you. I know I hate to rush everybody, but let's try to stick to the pertinent parts of the annual report. You don't need to go through everything that's I know kind of routine that we would cover in a quarterly report. So like any major management changes, business changes would be good to share. I don't know.
Is this annual sorry, is this an annual report or quarterly report?
This is an annual report. Annual report,
Oh.
10 minutes for an annual report.
Right, annual report, you need to give a bit more time. Okay.
Didn't I give him 10 minutes or did I give him 5 minutes?
You gave him 5.
Oh, sorry. Did you?
You said 5 minutes. You said.
Okay. Well, but see, we have, how many do we have, John? We have like everybody turned in their annual reports.
I only scheduled 4 annual reports because we like last year we decided to do March and April for annual reports, and if they were a hold, they could go to April. If they were a buy or sell, they should go in March.
Okay.
That's
all right. But this is a hold. This is a hold.
Pero, simple question. I have a simple question.
Yep.
To keep Amazon or sell it? Get out of it.
What is it? To keep Amazon or to sell it? No, to hold it.
If you have Amazon, keep it or get out of it.
No. Well, keep it. And then when the price, we bought it at 161. When the price, right now the price is 170. So if we sell it now, we realize a gain of about $10. But when you factor in commissions, you don't get nothing. If you want to sell it, when the price goes up to about $180, $185, and then I put out the question, what does the club want to do? Buy or hold or sell? Because then you could sell it, realize a $20, $25 gain. Yeah. Then when you take away the commissions, you raise maybe $15, $16. But the problem is with Amazon. One of the problems that they had in the past was they spent so much money on infrastructure. They built out their infrastructure. Now the infrastructure was big. Now the Amazon always wanted a couple of pillars of business. One of their pillars of business is the retail side, which is third-party advertisers. Third-party sellers actually did very well. The other part of their business is advertising. That's the second pillar. The third pillar of their business is AWS. Computer services. The fourth pillar, which is just emerging, is logistics. Because of the build out of their infrastructure, they're now willing to sell their logistical expertise to any client, any seller out there, and that we think is going to be pretty big. So, some of the profit margins now moved from 1.8% many years ago to now it's about 7.8%. So the profit margin went from a grocer to more kind of almost not quite a software company, but pretty close, a service company, let's say. So their profit margin, the value line thinks that it's going to be around about 8% in the future. So, in the future, the price might very well go up to 250, maybe 300. So right now, hold.
Yeah, that's a very, very long, complex answer. Thank you. Yeah.
Okay. I guess that's the end for me.
John, yes. John, who's next? I guess we should do
Hanny
through
wants to
the,
sell
okay, Hanny.
FCX.
Hanny, I'm gonna make Hanny the presenter. Hanny, you're self-muted.
Okay. So let me just get my report up and then I will accept.
And I'll give you 10 minutes. Tell me when to start.
You can start now.
Okay.
So I'm doing. Can you see my screen?
Yes.
So it has the annual report. So I've got
No.
two screens.
Sailboat. Sailboat.
Oh, the sailboat one.
Henny, you have a very nice sailboat there.
That's not my real sailboat, but my real
Your
one
real
is
one's
not bad.
bigger?
No, it's smaller.
Okay,
It's
okay.
smaller.
Make it real, Henny.
So the price today, I'm doing Freeport McMoran, which is a copper miner, and so I've been pretty bullish on this stock for a while, primarily because of because of the demand for copper. But a number of things recently have changed, and I'll just give you the overall summary. This stock may do well in the future, but there are a number of risks, and I don't know if the risks are worth the the potential reward. So I'm recommending that because we've made money on this, we made 44% roughly since we bought it. I think we should sell and look for another opportunity or wait and see what happens with copper. Now, I won't go through the numbers. I sent this out like a week ago. I'm happy to, if you want to see any of the numbers, let me know. But I'll just go through some of the recent developments. So the big thing was they where's that other box? I guess I didn't. The current CEO Richard Adkerson, who's 77, decided to step down, but the new CEO Kathleen Quirk has been with the company for a long time, 35 years. She's very experienced, ran different departments within Freeport. So the management change is actually positive because you're getting someone with experience who's much younger. Freeport operates in a number of jurisdictions, Indonesia, the US, Chile, and Peru. And all of those jurisdictions have some political new governments that are going to be coming in, including the United States. And so that typically means that there'll be some regulatory changes. And mining in general is not an environmentally friendly activity. And so there's always like social pressure, environmental regulations, and so on. And both in Indonesia and Chile and Peru, there's a lot of changes happening. So that's a big risk. On the positive side, management is very disciplined. They run a tight ship, but in any mining activity, you're kind of subject to commodity prices. So you can run a very efficient operation, but if the commodity prices are depressed, you're going to make less money, and that's kind of outside of your control. So right now, copper is somewhat depressed mostly because of China. The economy there has not taken off as people had expected. And then I think there's some long-term structural issues within China, demographics and other, the real estate crisis that happened, that was a big driver of copper demand. And so that's no longer there. In North America and in Europe, adoption of EVs has slowed down. So that's another issue. On the political side in Indonesia, the government passed some laws that require foreign companies to invest in the country, which is not a bad thing. They can't just sort of take resources and export them without making some sort of investment in the country. So Freeport has been building a refining operation to refine copper rather than ship sort of raw metal out. So they're building a new smelter in Indonesia. And until recently, they had about 51% control, and the government had 49. So that was good because they know what they're doing. And then their export license to export copper is coming up for renewal, and the government is putting pressure on them to give them more interest in this copper smelter. They want an additional 10%. So they may not have the operational control that they had in the past. So that's a big issue. So for these and some related reasons in Peru and even in the United States, I think there's a lot of risk. And and then if I look at the, let me just get the SSG out real quick here. I'll shoot over. Okay. Now, when we do the sell checklist, it says to do an aggressive sort of optimistic SSG, which is what I did. So I have a 4% sales growth and 13% earnings growth, which is optimistic. If the price of copper shoots up, that's they have the reserves and you know they're running an efficient operation, so these numbers could could be exceeded easily. But when you look at sort of the upside price is 70, and I'm using a PE of 30. Now, for a company that's growing earnings, at 13%, to have a 30 PE is very, it's a bit aggressive, especially like when you look at some other companies, especially in the tech sector, that are growing earnings much, like even things like AMD and NVIDIA and so on and so forth. So I think this is even though it's an optimistic SSG, with a 30 PE, that's a bit rich. And now when you look at the total return, you're looking at about 10%, which I think doesn't justify the risk. So for that reason, I'm suggesting that we sell. And that's essentially it. If anyone has any questions. Okay.
Hi, Hanny. I have a question.
Okay.
So it looks like it's at the top of its range right now.
Yes.
Like what was it? What was the high and the low? 52.
44.
Oh, 40. Yeah. So
44.90, and it's at 44.61.
And do we expect it to go? Is there anything indicating that would go higher than? I mean, I know in the recent weeks, because I've seen it kind of hit the headlines. Freeport McMoran, gaining, increasing in price. What are they attributing that to?
Copper. Copper went up a little bit.
The price of copper?
Yeah, the price of copper on the London Metals Exchange. And if you plot, which I showed this like, I don't know, 2 years ago, but if you plot the share price of Freeport and you plot the price of copper, they're pretty much like just following. Freeport is following the copper price. Whatever happens, it's like they're very much in sync. So whenever copper goes up, so this stock was like 30 something like a few weeks ago, and then copper went up and it went up to 44 all of a sudden. But unless copper goes up much higher than that, I think this 70 is a bit of a stretch. But I did that because on the sell checklist it said do an aggressive, optimistic SSG before you recommend to sell. So I did. That's what I did.
And what percentage? Oh, go ahead. Go ahead, Reddy.
Henny, the Did you take the Morningstar report or value line? Because Morningstar do not have correction. Morningstar has corrections which are not really true and relevant to business.
Yeah, I don't know if that's relevant given the, so I'm going more on, so I did, where is it? Hold on one second.
Yeah,
Okay,
many times Morningstar
see here,
has
this is, yeah, so what I did here, Reddy, was I took all the, I took all of the earnings estimates that I could find, and I calculated the compound annual growth rate based on the number of data points, whether it's 1 year, 2 years, or whatever. And then I averaged everything out. I also took the BI member average, which is what I ended up using. Okay. So, you know, that I have, I think, one opinion.
yeah, I cannot hear you.
And
Hanny,
more than one.
you're at Hanny, you're at
But
time.
Henny,
Sorry.
Ready?
these are future predictions, Henny. But the past data, Morningstar does not have one-time corrections. Value line has one-time corrections.
Oh,
Okay, I'm not sure what the
yeah.
like what you're getting at. I don't understand.
Yeah, the special deductions, tax.
Ready? Can we save this for discussion when we decide to sell or not? Can we
Okay.
go on to the next report?
Okay, John.
Okay, thank you. Who's got the next one, John?
That's me for
Okay.
Google, because I'm recommending a buy, and I can start now, but I need to share my screen, obviously.
Okay.
Where is it? I'm just going to pick myself to share. Here we go. All right. All right. So here's Alphabet. You know them mostly as Google. Let me start now. So I did this price here on my report date, 3/8/24. Now it's got to 142.17.
John, it's garbled.
My voice is garbled.
The transmission of your, I don't know, are you using AirPods or?
Yeah, and they suck.
Okay.
I'm trying to just do my computer. Let me see if that's better.
It sounds a little better now.
Hello, can you hear me now? Is it better?
Yes.
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 Okay, thank you. All right. So as I said, I was trying to say the price is 142.17 now. When I did the study on 3/8, it was 135.41. It's getting close to 52-week high, but now then 23.3 P ratio, now 24.5. 5-year average is 23.1, so it's pretty close to 5-year average PE right now. Revenue went up for the fourth quarter. I don't want to even look at that, but for the year it was up 8.67%. So nothing mind-bending, but it was a lot of revenue. It was just a ton of revenue, 307 billion. So that's a lot of revenue. Current ratio is 2.1, which is, we want more than 1. I think we all know that. So 2.1 is plenty current ratio as far as current assets versus current liabilities. Free cash flow is just a naked number, but it's very high, 69.5 billion. That's pretty good for free cash flow. No negative results that I saw. Down to here. So these are the historical sales growth rates. I picked 8.2 because that was, I believe, recommended by analysts. No, why did I pick that? That was last SSG. I picked 9.7 because that was recommended by analysts. So now it's 9.8. It went up a tiny little bit since I did the report. And then for EPS, for this current one, I did 12% because analysts recommend for the 2-year long-term estimate 14.1. And if I do go down here with 9.8 and do a preferred procedure, I get 10. So I split the difference is the main way I look at that. Nothing, no huge, detailed analysis there. Just split the difference between the two estimates. And then their shares outstanding went down. They're buying back shares like lots of big companies do. Pre-tax profit on sales is even, so you might think that's not good, but it's 27.9%, so it's very good. Return equity is up and very good. Debt to capital is down and very good. So that's all good. Now, I do want to kind of like summarize this, let you read this yourself. They're basically crushing it with their markets. Their main markets, which is Google Search and Android and Google Chrome. They're crushing it with those products. They aggressively invest in R&D, 80 billion in the last 2 years. Someone talking? Okay, never mind. Okay, they have an 11% market share in the cloud industry for 3rd place. So they're trying to build in cloud. They're probably not going to dominate there. That's what I learned from that's what someone told me in a Seeking Alpha article, that they're not going to dominate there, but they do have a good market share in cloud as well. They're trying to build it up in there. On the negative side, Microsoft's Bing has gained slightly against Google Search since the introduction of ChatGPT, but that's very minimal so far. Here is the gain in Bing. Bing is the dark blue, navy blue. Google Search is the royal blue. See, Google Search has gone down a tiny bit. Bing has gone up a tiny bit. This is about the percentages on the left. So it hasn't done that much just yet, but it has gone down, Google Search, a little bit to Bing. Google has Gemini now. They called it Bard. Now it's called Gemini. It's like ChatGPT, but for Google. They made some images that many people were critical of. They pretty clearly the images were not good. They were not accurate. So this is a mess tip for Alphabet. That lowered their stock price, as well as the lower than expected growth, lowered their stock price to 135, as I said, but now it's 142. It's gone back up. And then this last thing here, they have 140 billion in liquid capital and 13.25 billion in long-term debt. So they're just long-term debt. They could just eliminate that today and no problem. So here's my final thing, and I'll show the SSG as well. But Gemini has gave Alphabet a black eye with that image generation thing. But and then the slower than growth that I've mentioned. But that means Alphabet is undervalued, or at least they were a couple of weeks ago. It's not a super high extreme grower anymore. I know some of our members have questioned me about how it's going to grow. It's when it's so huge, it's hard for it to grow super fast. But it is a money printing machine with a fortress balance sheet and has an entrenched mode internet search. So now, I mean, I would just Magnificent Seven just prints money. I would, for fundamentals. If you look at the fundamentals of stocks in general, of companies, then Google is one of the best fundamentals of any company that exists. So I'll go to the SSG real quick. I already told you what I did for here, and I already went over these. So I guess I'll go to the second page. And yeah, you can view that at your leisure. But I picked an average high PE of 29. That's what it said here. I don't know why it said that actually. Oh yeah, 5-year average high PE. Oh, that's my bad. Okay, so it's probably going to be a yellow now when I do go 25. Let's just say 25. Yeah, yellow. And selected forecast low is based on a 17 average low PE, and gives me 98.6, which is possible with 142 for sure. Anything's possible, but not really likely in my opinion. But and then I just want to show you this so you can glance at it. Now, I don't want to analyze every one of these statistics, but it's 81 and fairly green except for CapEx over sales, which is higher than 10% for most of these years, but that's not a bad thing for them to be investing in their capital expenditures. They invest heavily in their own company. You know, they don't have a dividend because they invest heavily in their own company in research and development and capital expenditures. So I don't necessarily think that's a bad thing. And I got about a minute till I get to 8 minutes. So I think I'll just stop there. If there's any comments, feel free to leave those for the buy sell. But if anyone has any questions, I could try to answer. Those. But that's all I got.
Okay, thanks, John. Now who's next?
You are.
Okay. Hold on a second. I'm sorry, I'm not ready. Oh boy. Okay. Okay. Let me make myself presenter. Okay. We've held Schwab for quite a while now. We bought it in 2019 at $40.16. We bought it again when it was 30.39. It's so we should have doubled our money on this because or nearly close to it. At one point it was 70, close to $75. I don't think we ever trimmed it. But it got impacted. Schwab was impacted by the banking crisis where all those banks, I think it was the Silicon Valley Bank, there were several banks that ran into a lot of trouble. So Schwab is still recovering from the impacts of that. They also merged with Ameritrade. So absorbing those accounts, they actually recovered fairly well. I guess the last time, last year they were at $49.35. So they've increased their stock price. I mean, for the most part, I think Schwab is a very stable company. I can't do the Buchholz ratios on Schwab because financials is such a different animal. Actually, let's see, there's a whole, we do the standard annual report assessment when we do Schwab. So you notice how these don't look very good. Actually, this should be green, right? Because it's, oops, I don't know how I do that. Oh no,
It's up.
Debt to capital, it's up. Oops, sorry. Oh, I forgot to time myself. Hold on a second. I'll give myself 5. Let me just show you. Okay, so there's a bank evaluation checklist that we do in addition to the normal annual report summary because banks are not assessed, or financial companies are not assessed similar to regular, like retail companies or commercial companies. So they ask, they look at things more at the debt to capital, the return on their assets. They also do these valuation checks to make sure that that it's a solid company. So let's see, yeah. So for the most part, I feel like Schwab is a stable company. They're battling conditions that are hitting all of the banking industries. So, and actually, since banking is a portion of what Schwab does, it's primarily a brokerage, but they do have to handle investments. So there were things called sweep accounts where the people would put their cash, have their cash in that Schwab was paying a lower interest rate than a lot of banks. So people were moving their accounts, their cash accounts out of Schwab into higher paying interest accounts. So that impacted them. Schwab does have like priority for their prime customers. They have a higher, like 5% interest on their cash accounts, but they're still working through those issues. So I don't know if everybody uses the My iClub report generator. They can generate a report based on your SSG. So this is the report of showing the stock price and the revenue and the revenue growth and the EPS growth. And then so with the, I'm just going to quickly go to the bottom. So they give this the quality rating of Schwab at 1.6, which is undesirable. But on the other hand, they're since it's I feel like it's a stable company in the marketplace, that it's actually a hold for us. I mean, I don't see right now about selling it. I mean, we could, but I'd wait till it goes, it recovers from the banking, you know, the ramifications of the banking crisis. So that's my report, and it's a hold.
Joanne,
Yes.
couple of quick questions. One, the 1.6 for quality, is that do you think because these are automated reports and
Yeah, and
it's a bank?
Yes, and that's the problem, I think.
Yeah.
Is that
yeah. So that's probably, I'm guessing, is why it's so low, because I don't think that's quite correct or makes sense.
Yeah.
But the other question I had was Schwab just bought, because I know this from personal pain, in Canada, we used to have access to Thinkorswim because TD Bank Canada owned TD Ameritrade. Then they sold it to Schwab recently within the last year or so. And so that we no longer have access to that. But Schwab has, there's quite a following in the United States for people that trade options. And that most use Thinkorswim, which Schwab now owns.
Okay, I just was learning about that, and I wasn't sure what it was. So that's interesting that it was. Go ahead.
It's probably the best options trading platform. I would like to say, if without exaggerating, in the world. There's a few that are coming up that are pretty good, but it's the most popular, and there's a huge following. A lot of people trading options in the US and internationally use Thinkorswim. So I think that, like, when if the trading, I don't know if that sort of came into their revenue reporting yet, or if it made a difference, but I think going forward it might.
Thank you for that tip. I will definitely report on that on the next quarterly report. I mean, I just kind of saw it and I thought, oh, that's just a marketing term they're using, but I didn't realize it was actually a product that they're.
Yeah, it's a big product. TD Ameritrade bought it for 600 million, and I don't know what Schwab paid for it, but it was much higher than that. The other thing is relating to these sweep accounts. So when you trade options, usually you have some cash that you have to set aside that the bank requires you to keep. So that's what the sweep accounts are, and they weren't paying that much interest. And so there are a few others like Robinhood and others that were paying higher interest. But the balance there is that the trading platform Thinkorswim is very, very sophisticated and has a lot of information that option traders need, which is not available on some of these other platforms. So even though people might have been moving some of their cash over, they still have to keep certain amounts based on how much they're trading options.
Okay, I see. Well, thanks, Annie. That's great information. And I will keep out.
Yeah.
Go ahead.
I had two questions. I answered one of them for myself. That was that there's a stock split on March 11, 2022, 2-for-1. So as we know, that lowers the price. that you see. It doesn't lower the value of the company. It lowers the price that you see. So that's why I think below on this thing that we're looking at right now, it said it had a 90% increase in value further down than the screen showing right now. It said that on that piece of paper you have right there below. So
on this one?
yeah, somewhere in there it said, yeah, valuation, below valuation. Overall gain 90%.
Oh, in our portfolio?
Yeah.
Oh.
Stock split.
Because we bought it. I see.
So yeah.
Okay.
Also, I was wondering if you knew anything about the short, what is it called? The bank term funding program that they started to kind of bail out banks after Silicon Valley and the other ones failed.
I mean, the government?
Yeah, the government, they just ended it, but I'm not, I don't believe that they're gonna let them fail again though. I don't think that's gonna happen, but I'm just wondering if you've read about that bank term funding program, BTFP.
No, I haven't.
Yeah, they were helping all the small banks, but the BTFP ended on March 11th, 2024. So
what's it called? What's the initials?
BTFP, Bank Term Funding Program. Yeah.
Okay.
It was created after the crisis last March. So,
okay.
Whenever the crisis was.
Okay. And they just stopped it?
Yeah, they just stopped it. So people were wondering what's going on with the banks now.
Yeah, I don't know. It's a tough business to be in right now, I think. Yeah. I think that's it for me. I went over my time. So who's next?
That's all we had. All I had scheduled. We could do Christopher, since he was the first to provide his information to us, or maybe one more. I think. What do you think, Mina and
Sure.
Joanne? One more, and then go on to we have a lot of business tonight. So.
Oh yeah, let's do one more. I like these. We haven't heard from Christopher on QYLS for a while, have we?
I can't remember. Maybe not, because it's just quarterlies are not always covered. So
I'm going to make you presenter, Christopher.
Thanks. Second. Okay, yeah. So QYLS, yeah. So let's go over to annual report. So the purchase price we got was on July 21st, and it was 114.62 cents. And then the closing price as of February 29th was 171.86 cents. And right now I think it's 166 something. And the 52-week low was 107, and the 52-week high is 206.35 cents. The current PE ratio is 40.7. The 5-year average PE is a little bit higher than the current PE ratio, which is 44.8. The 5-year average low PE is 33.5, and the 5-year average high PE is 56.2. Yeah, and then the revenue, so Q4 revenue in 2023 is 144.6 million, which is an increase compared to last year by around 10%. And last year was like 130.8 million. The whole year as a whole was 554 million, which was a 13% increase from the year before, which was around 490 million. The total current assets is around 600 million, which is also an increase from the year before, which was 473 million. And the total current liabilities is a little bit higher, which is 389, but it's not that much higher compared to the year before. So like there's more of an increase in the current assets than there was in the current liabilities, which means the current ratio is higher, which is a better thing. But yeah, so the free cash flow, it's higher this year than last year, so I didn't put any reasons for the negative results because it's positive. Yeah, and then the historical sales growth rate, the 10-year was 16.8%, the 5-year was 14.9%, the quarterly sales growth rate was 10.5%, and the trailing 4 quarters was 13.2%. The sales forecast from the SSG was 12%. The sales forecast for the current SSG is 10%. And then the historical EPS growth rate, the 10-year is 24.7, the 5-year is 21.5, the quarterly is 45.9, and the trailing 4 quarters is 46.4. The earnings from the last SSG is 6.3%, and the earnings forecast for the current SSG is 6%. Yeah, and then the daily shares outstanding, it's for this year, or for the past year, for 2023, it was 37.6%, and then for 2022, it was 39.3%, or yeah, million, my bad. Yeah, and then the pre-tax profit on sales, the current fiscal year, which is 2023, was 32.2%. Let me just change this. The 5-year average is 26.8%, which is trending up. The return on equity is 45.9%. The 5-year average is 26.4%, which is trending up. The debt to capital is 7.2%, and the 5-year average is 10.8%, and that's trending down. Yeah, so the next year guidance, yeah, so they expect their revenue for this upcoming year to be 8 to 10% growth over 2023, which is a little bit lower than what we have been seeing over the past few years. I think the past few years, it's been generally like 13%. Yeah, so it's slowing down a little bit, but still decent, I'd say. Yeah, and then other important news. So this year, they kind of expanded their product to be FedRAMP compliant, which means like governments can use like their cybersecurity solution. So I think that's a high point. They didn't have any mergers or acquisitions, which they did the year before. So, so I think that's part of the factor as to why they didn't have as much debt this year. And then, yeah, and they also harnessed the technology that they, from their acquisition of the company they acquired the year before, which was Blue Hexagon, and extended their deep learning AI to basically just like explain their product. And yeah, and the final recommendation is a hold. And we can look at the SSG real quick. So yeah, yeah, which is, I just crossed out some of the outliers here, and then for the PE, yeah, and then I went with a hold. The average high PE 56, and then the low is 26, and then yeah, it came out to a hold. Any questions or comments?
So I'm just speaking from my industry's experience with cyber attacks. We had a cyber attack on a company where they had to pay $22 million in ransom. Is QYLS seeing like an increase in corporate cyber attacks?
I'm not sure if they're seeing like an increase in their, I guess, like, what do you mean by, like, I would assume that right now there's just like, because technology is like everywhere, there's probably like more cybersecurity attacks everywhere in general. But I guess like their solution is like VMDR, which they're getting more and more market penetration, I guess, which was presented in one of their presentation. But I'm not sure if they're actually, because I wouldn't assume they actually publicize like information like that unless it's like a really big deal.
Yeah. It's interesting because I think a lot of corporations probably don't publicize, well, because it's a total vulnerability, and you're going to lose a lot of business if you have customer breaches on customer information. So yeah, I just find it really interesting that it totally brought the company down They could, and I work for the hospital association, and they couldn't, hospitals, and this company was an exchange. So they handled all the billing and claims, and people weren't getting paid. They couldn't get, like doctors and pharmacies weren't getting paid. They couldn't get federal payment for the Medicare and Medicaid patients. It was kind of a mess for a while. And the government had to step in and help out. So
that recently happened to United Healthcare, correct?
yeah,
Where
that was
doctors
yep,
were considering pulling out.
Yep, it was I think it was Change Healthcare or something was the name of the company, but yeah.
Christopher.
Christopher. Oh, sorry. Okay.
Yeah.
Sorry, Haney, you go ahead.
Oh, go ahead, Jane. That's okay.
Okay, Christopher, I just have a question. You just said that the company got the government approval so that they will be able to sell the products to the government. Is that correct?
Yeah. Yeah.
And then does the 8 to 10% revenue growth rate already incorporate that projected revenue?
I think, or no, the 8 to 10% is for this upcoming year. The government was this past year.
Okay, so it's already being included in
Yeah,
the
I would
projection.
assume so. Yeah.
Okay, thank you.
Christopher, do they say anything about applying AI to their
Yeah,
to their suite?
they are extending like their cloud scale deep learning AI to discover and identify patterns between like the data and just to apply it to their solutions. Yeah.
And like, so how, because there's been a big buzz about that sort of thing, but you had like CrowdStrike and Palo Alto Networks. And so how do you have any sense of like how they compete with those companies, or what their position in the market is relative to some of their other competitors?
They have their I guess like comparison to like their peers in their presentation slides, but
right.
I would say that it's kind of different, I guess, because each cybersecurity company or like they have like their own different products that kind of target different areas, I would say. And
right.
yeah. So okay. I think that like it really depends on like I guess like the customers, right, and what they're purchasing the product for. Yeah.
But to Joanne's point, I think this is like a huge growth opportunity in this sector, because as AI gets more mainstream, it's going to be used to improve things, but there'll also be a lot of people using it for not so nice things. So these companies, I think, are going to play a big role going forward.
Yeah.
So Christopher, I have a question. I think the 52-week high is 206, right?
Yeah.
And now it's 166. So there's quite a room for growth. Do you know why there's a big decrease in share price from the all-time high?
I don't remember when was this high.
Was that when the president had to leave for health reasons, or?
No, that was long ago.
That was a while ago.
Oh, that was okay.
So this was back in December, and I feel like during then was when everything was pretty was pretty high in general. But yeah, I mean, they did miss their revenue by a little bit, I guess. Maybe that's part of the reason, but I didn't see anything that was like too big of a deal. I feel like 166, 170 is usually what they're at anyway. But yeah.
Yeah, my question is that I think what Haney is getting into is whether there's a big growth potential that we may foresee. And AI could be one of the areas.
Yeah, but I don't think it's that much of a growth compared to like historically. Like we could even see from like just the historical sales growth, right? How it used to like the 10-year average was 16.8%, but in recent years it's more like 10%, 13% or so, right? So, and like even their forecast or their expectations for this year was 8% to 10%. So it's definitely not as much of a growth as they would see it to be. I feel like AI is kind of like a bubble, I guess. Like we don't really know if like it really can have impact in terms of like how how much of an impact, right? Like we don't really have a scope, right? So I think it's kind of hard to gauge upon that. It's very speculative in a sense. Yeah.
Okay, thank you, Christopher. Because I see the aftermarket price jump by 2%. So I wonder whether there's anything. Okay.
Okay, I want to move on to our guest, but can I do a quick, I forgot, I did this, I loved what Jane did before for the 5321. So I did one for Schwab. So can I quick go over this for you guys?
Sure.
Okay. I just love Jane's format. So if you guys, it's so easy to follow this. I mean, she lays out, you know, the company, the period, the observations you want to make, 5 for the cash flow, 3 for the balance sheet, 2 for the income statement, and kind of your overall reflection. So, and it's pretty, I mean, I don't know, Jane, how you feel about this, but it's just kind of it's subjective. It's your opinion of how you see the, as you look at the cash flow statements, as you look at any of the statements. Do you agree, Jane?
I also, because my observations are based on numbers. So I look at financial statements. Yeah.
Okay. So this, and maybe mine are just kind of high level, you know, reviewing in the numbers. I think your numbers, you actually picked out the numbers, but this was mine as far as there was an impact of the interest rate changes because the increased short-term interest rates increased. That's when people were moving their cash out. So that was one of the things I saw with the cash flow statement. And then the company's response to the outflows. And something I found out about is this Federal Home Loan Bank, where the federal government helps out these banks. I don't know if that's anything to do with your, John, what you were talking about. I'm going to have to look at that more closely, the bank term funding program. And then this trend reversal of the cash reallocation slowed significantly from the second quarter of 2023. And then they had a financial position was increased by 3.1 billion from 2022 to 2023. I mean, this Schwab handles a lot. I mean, 3.1 billion is driven by their investing and operating activities. But then on the other hand, their bank deposits decreased by 76.8 billion due to clients withdrawing their bank deposits. And then the comparison to financial activities in 2022, 2022 saw a decrease in cash and cash equivalents alongside a significant decrease in bank deposits. So 2023 was kind of a following up on that. And then with the balance sheet, there was this the transactional sweep cash growth. So there was 402.9 billion in November 2023, which is a $5 billion increase from the previous months, the largest since March 2022. And then clients added over 7 billion across Schwab balance sheet cash solutions. Then there was a gap, spending rose by 10%. That was attributed to the Ameritrade integration, and then a shift to higher yielding alternatives. That's what we were talking about before, is that Schwab has fairly low cash yields for their cash accounts. And then for the income statement, total revenues were down 9% versus the prior year levels. Again, as client cash realignment really impacted this company with the interest rates, and then core net new assets brought to Schwab by new and existing clients total 21.7 billion. So the company's still getting new and existing clients. That's primarily their brokerage accounts. So my overall reflection was total net revenues declined by 9% compared to the prior year. Factors include the cash realignment, the moving of the money from the sweep accounts, lower transactional cash levels, client trading volumes, and securities lending activity. So this is a significant revenue challenge for Schwab, but on the other hand, they have positive deposit inflows. So hoping that this company can weather through the interest rate hikes and the general, I guess, feeling about people are insecure about banking in general. So anyway, that was my 5, 3, 2, 1. I thought that it was a fun way to kind of do an overall review of the company. So that's I thought, oh, I forgot to share this.
Thank
Okay.
you, Joanne. That was good.
Thank you. I really like this, Jane, and I'm going to be much more. So you said to look more at the numbers. So I took this mostly from the management discussions in the 10K, but I'm going to actually pick out the actual numbers like you do next time.
Yes.
Okay. Okay. So let's go. Should we go to the guests? Is that the next thing on the agenda?
Yes, I believe
Open
so.
mic for guests. Is Mina still on? Mina, did you want to?
Are we doing any of the buy and sells?
Do we do that?
And a sell.
Okay. Do you want to do that now or do it after the guest comments?
Oh, okay. Whatever. I'm not sure.
I think we do it after the. Did you say something, John?
Usually guess first, yes.
Okay. All right. Mina, did you want to go through the? Is Mina on? John, do you want to do the guess?
Okay, sure. So, Brian, do you have any comments or suggestions? Sorry, I'm trying to unmute you and I'm failing. There you go. On our meeting, go ahead.
Okay, good meeting. Good discussions. I appreciate that. The one question that I have, and this is my investment club too, is on the last one on QYLS, there was a discussion about the price in that. But I noticed that at no time did you go look at in the research tools and look at the price chart for the Big 5 chart. And what I'm trying to get my club to do is well, actually, I do it for all of the companies. And if you notice for QYLS, I do it by the month. In December, they were somewhere about 195 was the close. And then in January, it was a little bit under that. And in February, it had a big drop. What I'm trying to get my investment club to do is that's part of the brief. The numbers on the SSG are a snapshot, just like the balance sheet. They don't tell you where it's going. So you look at this, And the other thing that I'm trying to get the club to do is for each company, each person that owns a company, let's say that back in December, when it was 195, they put if it got below 110%, would be what, about $40, $35, $160. They would that would be a discussion point. It's not a buy or sell point. It's a discussion point. It doesn't look like that would have changed because 195 down to 165 is where it is now. That wouldn't have shown up much, but at least it gives you a time that if the price starts to move up or down, you can adjust the discussion price, and then you won't end up like we did watching one company go from over 200 to under 100 over about a year. Every time that we had a brief on it, it came in, well, it's a hold range, it's a hold range, it's a hold range. And yet if we'd have looked at the dollar figure, we probably wouldn't have lost over $100 a share. So anyway, that's just something that I'm trying to get my club to go on, and I thought I'd mention it. Thank you.
Thank you, Brian.
Yeah, thank you, Brian. Jocelyn, I believe, is your name. Would you like to share me? Unmute you if you would like to share.
Yeah, I'm just listening here. I'm new, so I'm just a comment on SWAB. I think I agree that it's a hold, and I'm looking at what we talk about, the trading platform. I think we should, the group should really look into that. But definitely, I'm just learning. I'm just want to just say I learned a lot from the conversation here, and I hope to be part of this group.
Oh, thank you, Jocelyn.
Yeah, thanks, Jocelyn. I believe we attend the club for 2 months, hopefully in a row, and then we can invite you to participate in a stock study if you want to. So, Joanne, how do the person?
Yeah. Jocelyn, have you attended 2 meetings in a row?
Oh, sorry, not yet. This is my first.
Okay. Yeah, that's what we require, 2 meetings in a row, and then you can participate in a stock study, and then we mutually decide if it's a good fit.
Okay, great, wonderful.
Okay.
Thank you.
Thank you. Now, Philip, if you would like to provide your feedback and comments on the meeting. You are self-muted, Philip. You're talking. Okay, well, maybe we'll get back to Philip later, but Serena, I'll unmute you, and if you would like to provide your comments or feedback on the meeting, thank you for coming, and feel free. You are self-muted as well right
now. Hello, this is Serena. Can you hear me?
Yes, we can.
Okay, cool. So I'm just a rookie joining BetterInvesting, so really appreciate you guys are having me. I'm still learning, and then looking forward in the future to continue learning from you guys. That's all. I don't have questions for today. Thank you.
All right, thank you, Serena. Thank you for coming. Well, that's all our guests, unless Philip wants to speak now. We can. Here we go. Hi, Philip.
Sorry. There's no pretty positive view of exchange.
Your audio is really pretty bad, Philip. I'm not sure if it's.
That's the problem with this damn computer. You'll excuse me, but can you hear me at all?
Yeah, we can hear you. It's very distorted. That's all.
Okay. We talked about Google. We talked about AMZN, and we haven't talked at all about Apple. There's something going on between Apple and Google.
Philip, we really can't hear you. So,
okay.
Maybe
you could get
you could,
another headset or.
or just write a question and write in the question box.
Oh yeah, that's a good idea. You can write in the question box below or the chat below. Thank you, Philip.
Thank you. Very nice meeting.
Okay, well, thank you, everyone. Thank you, all the guests.
Sorry, Philip is asking about, I think it's Philip. He says, where can I find more about Ron Bruin's methodology?
It's Brian. Joanne, can you answer that?
Brian.
Okay. Actually, Jane, are you familiar with that?
This is Bakul. I can answer that.
Oh yeah,
Actually,
Bakul.
Bakul, yeah. Actually, that I was going to say, sorry, I want to take this offline. That's a method actually from Bakul.
Yeah, so
Originally,
actually,
Bakul, yeah.
so I introduced 532 to Ron, and Ron introduced it to your club, and I don't know whoever else.
But, so it's yours. It's Bakul's 5321. Okay.
Yeah, so it doesn't matter
Yes,
if we put Ron's name. It's
yeah.
okay. So the intent of the 532 was the following, and there are 5 different things on the cash flow statement that one would be interested in, particularly for investors, which is what Warren Buffett says is capital allocation. So let's go through those 5 things. And so the focus should be at least these 5 things, if not other things, right? If you want to look at a company, you want to understand how it is growing. And if that's the case, you want to look at line items of the cash flow statement associated with capital expenditures, and the other is whether they're doing acquisitions, right? So that's 2 things you got to look at least at a minimum starting. Then the other 3 items out of the 5, after you finish the first 2, is you want to see things like, is this company doing buybacks or is it issuing shares? Whether it's a dividend payer and therefore you'll have a dividend line item. And the 5th one is what is this company doing with debt? Is it raising debt to grow either for acquisitions or just internal growth? Or are they reducing debt? So if they're reducing debt, that means the balance sheet is getting, it's getting better and improving versus if they're leveraging up the debt, either for acquisitions or something else, that may be something that needs to be watched over time. So that's the 5 things that one would actually look at, right? Now, if a lot of those things look normal or nothing out of the ordinary, you might look at anything that's exceptions. So what are those typical type of exceptions? They could be potentially like 1 year it's a bad year, like we've seen those, right? So for example, in 2020, in the pandemic year, you would expect a lot of companies got impacted, and therefore you'll find that would be a year that would have anomalous numbers as far as trends go. So looking at trends information, you might want to see anything that's an outlier. So those are the 5 things. And then the balance sheet, the 3 things that you want to look at, or 3 different areas. There are 3 sections in the balance sheet. I'm sure you guys know all that. And those are what? The asset side, the liability, and equity, right? So those are 3 distinct sections that you want to look at. And in those, you might consider, if you look at over a 10-year period, or like 5-year period, to see, obviously if the company's growing, if the assets are growing, is it growing based on, like the debt being increasing? Or is it, if the debt is not increasing and steady, is it based on equity? In other words, the management is funding the company's growth through equity and or debt. So those are the 3 things. Now, if you think that, oh, those things are normal and nothing's going on, really, then you might look at any of those anomalies type of years or quarters, right? And if you find those kind of things, it doesn't mean it's a red flag. It just means that, oh, maybe they've taken a write-off. Maybe they had a problem with some issue or the management strategy in their growth. They had some product problem, stuff like that. So you might want to look at those. And then finally, the two, which is for the income statement, you can already look at that from the SSG, where you might look at, hey, how's the revenue doing, and or how's the margins doing. Now you can look at margins on a, we already have pre-tax margin on SSG, but you can say, hey, maybe I might look at the net profit margin, or you might look at the operating margin, right? And so those are the two things. Now, once you get deep into all these things, 5, 3, 2, you pretty much have analysis paralysis, believe it or not. Pretty much I do, right? So that's why you have that reflection line. The reflection line is like you laser pointing into figuring out, okay, I've done all this homework of 532. What can I round up and summarize what I learned? And so that's what the whole idea was when the 532 was developed. So my question is, do you guys have any questions about it?
I have a question. What was the fourth item on the 5?
Okay,
you had buybacks,
dividends,
issuing,
buybacks,
and
dividends, and debt.
And so 4, what was 4?
The debt.
Debt, okay.
Yeah, so a company could be reducing debt, or it could be increasing a debt, to fund growth, right?
Wait, I thought that 5 was what is the company doing with debt? 5 was the debt.
So let's step it through one by one. First is CapEx for internal growth,
yeah.
or acquisitions, or they could be a combination of those two, right? Then I said it was buybacks, and so that was the third. The fourth was dividends, and the fifth was
dividends. Debt. Okay, got it. Okay, all right.
Now sometimes you're not going to have a dividend payer. So that doesn't mean that, oh, I only got 4 things to look at. You can look at other things that give you a little insight, right? Like those outliers. Like I know in SSG, sometimes we kind of, scratch out the outliers just to see trends. In this particular exercise, you don't kind of disregard anything. Everything is important, and outliers worth looking into and why it happened.
Okay.
Does that answer your question, Joanne?
Yeah, that's great. I hope that answers Brian's question. Where can you find out more? Well, we don't really, it's all in Bakul's head, so you don't have it written down anywhere, do you, Bakul?
I gave it to Ron, and I have no clue where I have it, because he he was.
Okay.
I'll talk to Bakul on Wednesday.
Oh.
Okay.
Okay. On Wednesday.
Okay, we should move on. We have actually have club business. Okay, should we go through this? Let me see. So the executive team met, and we had, these are our goals. So we'll go through these really quickly because we have some buys and sells. So these were our goals for last year: optimize and maintain member workload, ensure club knowledge, provide an educational program, support member engagement, identify high quality investment ideas. And our achievements were, we learned and used Bakul's ratios, and actually this is, we're learning actually Bakul's 5321. We presented 8 out of 10 educational topics, and we conducted 6 stock studies, and everybody participated. That's excellent. And we identified several high quality investment stocks. So let's see. So we have something very similar for next year. We want to do the same. And then we also want to encourage people to update the SSG on the My iClub prior to the meeting, so that Reddy can do his treasurer's report, because we all agreed on using My iClub per. And then we're going to have 8 educational topics. And then, so these are the people that need to give, okay, Anitra already did hers. So Chris, Piero, Isla, Reddy, and Jane need to do an educational topic this year. And then we want to do a minimum of 6 stock studies. We've already done 2, so 4 more during the year would be great. And then we also want to do new club executive elections. That's my summary for our club report, 2023 club report, and our 2024 annual goals. Does anybody have any questions?
I don't think we have time for questions. I mean, we could...
Okay, let's go quickly to sell and buy. Any?
Okay, real quick. I know Annie wants to go, but real quick. MedP last month was a limit order of 330, expiring today. It didn't meet it. It just treaded water about 390. You want to renew that, or you want to just let that go? MedP 330 limit order, or you want to change it, whatever. You remember that? I just
yeah, I remember it. So do we have to vote on it, or can we just say? I mean, do we have to do it every month?
We can let it go for a longer time than a month if we want to. Just let it go to, as Joel said last month, we let it go till expired, or till whatever, or till cancel.
Yeah, I think it's a good idea to check in every month at least, because Ready can execute the purchase if it hits that price, right, during the month.
Sure, Ready can do that.
So I think, yeah, as long as we have a vote on, or I mean, as long as everybody's okay with continuing to leave that option.
What was my price? What was it?
330 was the limit order price. Agreed to last month. Just kind of stayed the same all month. 390 or so.
Yeah, I'd say we continue.
Okay. Any new motions? Any buy or sell motions after tonight's reports?
I propose to sell FCX.
Do we want to sell all of it or part of it? I don't know.
I was hoping that we sell them all, but then keep track of it, because I think the copper price has increased tremendously just over the possible result of Chinese smelters. They have been discussing production cuts. So that's why they were afraid the supply of copper will be limited. So that's why the price tick up. But this is just in the discussion stage. Nobody knows whether it's going to go through. So I think we should take advantage of that and sell a big portion of it and then keep track of it. Because I think in the long term, the copper demand still there, because we will continue to produce electrical vehicles, and we will continue to produce new energy. And those production require copper, and the copper demand will be 4 or 5 times more than before, because all this production requires so much copper.
Yes, Jane, sorry, is the motion to sell all shares or to sell most? Just so
I think we should sell most of it. I don't know what Haney is planning, but Haney, what do you think? We should sell most of it.
I think we should sell
track
all of it. I would sell all of it, and then look at keep track. Yeah. So I second the motion.
Okay, Haney is seconding. I will send that out right now. Do a simple majority closing as soon as if all members have voted. Otherwise, the voting will close. Let's put it at the end of this week.
Yeah, I think Isla's the only one not present.
Okay, so we'll give her a couple of days, just to have a chance to review this. But so I'll post Friday as the last date. Otherwise, it'll close. If all members vote before Friday, it'll close. If not, Friday will be the day. So you should receive an email to sell all shares of FCX. Are there any other motions? Buy or sell?
John, you said, is Google a buy?
I think so, like 1,000. But I also like QYLS, honestly. I should have asked a question about why earnings per share. Oh, and you have a lot of QYLS already. It's a small company though, but anyway, I'm rambling. Yeah, I'll make a motion to buy $1,000 worth of Google, whatever shares that is. If we can buy that. I don't know if it's, yeah.
Does our club consider buying some kind of ETF? And there's an ETF called GGLL, and it's 1.5 times bull on the Google. So that will give us more upside. If we think Google is going to fly, then that would give us 50% more in gain. It's called
So what's it called?
GGLL.
GGLL?
Yeah, it's a bull 1.5 times of Google price.
Huh. I never heard of that.
So I don't know. I think Baku, do you have any experience with this?
The only problem with that is I don't think any of these ETFs are covered on the
SSG.
Yeah, we'll have difficulty in tracking.
No, we analyze underlying stock, which is Google. But then when we purchase 1.5, and that means if Google jumped by 3%, then we get 4.5% over that.
Okay. So it's only one stock, Jane.
It's only one stock.
Oh, I see.
But is my iClub? Can you track it in my iClub?
My club would be the difficulty too for the portfolio management.
Oh, I see. No, okay, never mind. If we cannot track, then never mind.
Okay. Oh, so do we get a second on that? No, I don't know.
Sure, I'll second.
Okay.
Okay. Buy 1,000 of Google. Motion made by John, seconded by Hanny. I'm just send that out now as well.
Okay. We at our last executive meeting, we discussed how we'd like to have the last few minutes be people just throw out stock ideas that they've been. You don't have to do a SSG or whatever. It's just stock ideas that you might have come up with that are possibilities for future stock studies or just for your own research. I think Reddy, was that your idea? Reddy, is he still on? So if anybody has any stock ideas they'd like to share or use the last few minutes. Okay.
Palantir and Tesla. Tesla is very depressed.
What's the first one?
Palantir, PLTR.
Okay.
It's a small company. Stock is about $20. U.S. government is a big client. Stock was at $7 about a year ago. It's now at 20 something, 24.
Okay.
And there's a lot of potential for further growth. And then Tesla.
Okay. So ideas for future stock studies.
Future stock study.
Yeah. Or to research on your own.
What is the symbol for Tesla?
TSLA.
TSLA.
Another interesting one I
No,
saw was
for the other one. For the other one.
Palantir, PLTR. PLTR is in Catherine Wood's portfolio all the time.
Okay, gotcha.
Good, Mina, right?
Oh, for me, yeah. So I think I've been hearing a lot of good things about ARM Holdings. I think they work a lot with chip manufacturers in the AI field, so there's going to be a lot of growth. I think they had released their earnings in March and really surpassed everything. Their stock exploded a little bit then, but I think they work very close with Nvidia, so it'll hopefully continue to grow. But they really jumped. Was it like
What's their ticker?
ARM Holdings.
And I know everyone's heard about it, but NVIDIA, I mean, Sam Altman wants $7 trillion, $7 trillion to compete with NVIDIA is the main reason, not to build up ChatGPT, but to compete with NVIDIA. If someone wants $7 trillion to compete with you, you're probably in a good spot.
Yeah.
Yeah, for sure.
So I mean,
I have another one.
Okay, go ahead, Jenny.
Yeah, I have another one. First Solar, FSLR.
So should we maybe like put these on a watch list, and you know, and then use the watch list to do future stock studies?
That's a good idea. I think we have a watch list in my iClub. Maybe we can start adding to my iClub. That's a great idea.
Yeah.
Okay. Well, we're at the close of our meeting. Great meeting, guys. And sorry if I like rushed people through their topics, but I think we got a lot accomplished. And
I think Joanne, like I think it's a good idea to give people a certain time limit, and we really need to. So, like I think we need to practice before the meeting, because we have a lot of guests and so on, and we don't want to take up too much of their time. But if we practice like Anitra did with a clock, and think about what's key and what's not, and what insights can we provide that they can't get from reading the report or looking at numbers. I think that would be useful.
Also, I would like to work with Bakul to create a checklist for our quarterly reports. So what are the essential we have to, what things that we must check and how much time to give, and so I want to work with him on a checklist for quarterly reports, then move on to annual reports.
That would be great.
Okay.
Jay.
I think that's a good idea.
Haney just shared with us, and one of the things is the stock analysis checklist. So that could be something we can start with.
Okay. So just showing quick up on the screen, what we have for next month are the other annual reports, and there's quarterly reports, and I think we have, let's see, April, who wants to do, does anybody want to do, would be Piero, Isla, Reddy, Chris, or Jane? Do you want to do a short little education topic? If you don't, you can assign somebody.
I'll do it. They're going to be from the magazine again?
You could do it from the magazine. Anybody could do it from whatever.
I'll do it. I learned a lot from it.
You just did it, Anitra.
It's okay. I learned a lot from it. When you do something, especially something, you thumb through the magazine, but when you're looking for something, you're really digging in, and it was really nice. So yeah, I don't mind.
Okay. Well, but Anitra, you also have your annual report.
I know. But I'm better at what I did this time for next time.
All right, I'm going to put you down for another article. You did such a fantastic job. That was really nice. Thank you.
Well, thank you.
Okay, and then just FYI, guys, we're going to have I guess the executive team's going to nominate people for the next executive, whatever, roles, president, vice president, secretary, treasurer. If you have an interest in one of those roles, let us know. Okay, well, I guess we can finish.
Thank
Just
you,
4 minutes over. Anybody have any last comments before we adjourn? No? Mina, do you want to adjourn the meeting?
Yeah, well, thank you everyone. I really appreciate it. And thanks, Joanne, for making sure that we finished on time and running a seamless meeting. So, yeah, appreciate everyone, and yeah, we'll see you next month.
Yes. Yay! Okay.
Thank
Thanks,
you.
everyone.
All right,
Bye.
thanks.
Thank you.
Bye.
Bye.